There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarley. Yet another record high coming through on the market, the fourth, I believe, consecutively. We are seeing gains of around 0.5% on the close. Of course, a really solid move coming through from Westpac. I'll just give you a read on where the ASX 200 is. It's actually up 0.6%. Oh no, sorry, 0.5%, as I mentioned, 40 points, 8,866. Temple and Webster, Pro Medicus, all of those stocks that have reported today and done well, very much boosting the overall market. And Westpac shares at a decade high, up 6%, $35.94. So that brings us to, of course, the thematics of the day, which is a record reset again, and the Westpac story really helping the overall banks bounce as well. We also had a positive read on jobs. Now, this is probably putting a cloud over whether or not we get a back-to-back interest rate cut from the RBA next month, although I spoke to Phil O'Donoghue from Deutsche Bank earlier, and he is still sticking with his belief that the RBA will cut. He thinks they're behind. They haven't cut early enough, so he thinks they will follow up. Of course, Michelle Bullock said herself at the press conference on Tuesday they're not ruling anything in or out. There could be a back-to-back cut or there could be another hold. Westpac's Justin Smirk also joined me. It was a really good panel you can find on ausbiz.com.au. He doesn't think that we will see a cut until November, but we did see the jobs market bounce back in July. 24,500 jobs created, a surge in full-time jobs of more than 60,000, and females got the most amount of jobs. So a lot of women returning to the workforce, female full-time jobs soaring by 40,000. Participation for females hitting a record 63.5%. Let's have a look at the banks, particularly led by that move in Westpac, although investors still selling CBA down another 1.2% to $167.49. Also seeing some solid moves in utilities led by Origin, which came through with its numbers today. Andrew just spoke to the CEO. You can find that interview on our website shortly. Origin up 6.4%, and AGL, which of course was sold off heavily in the wake of its result yesterday, up by 2% today to $9.11. The telcos, though, is where we saw some weakness. Telstra shares down by about 2.7%, despite lifting its full-year profit by 31% and announcing a $1 billion share buyback. Jefferies, though, calling the result a bit disappointing. Let's get into some of the news. We touched on Westpac. Its quarterly stat net profit up 14%. CBA, of course, continuing to fall. In fact, a 3-month low, and Jefferies has cut their price target on CBA. Suncorp's net profit hit $1.8 billion on cash profits close to $1.5 billion. Investors liked that. We touched on Telstra not doing well today, and the ASX down by 0.8%. It says its full year 26 operating expenses expected to continue increasing by $25 to $35 million this year. We just had CEO of Pro Medicus, Dr. Sam Hupert, on with Andrew. He's flagged that full year 25 was an unprecedented year in terms of converting opportunities into sales. Shares continuing to rise, up 7%, $316. Origin Energy doing well as well, along with the likes of Viva Leisure. It has climbed to a 6-month high on its strong results. Aurora hitting a 6-month high on its outlook, but South 32 falling. It had a $372 million impairment hit to its Moselle function. All right, let's welcome to the COB Jimmy Jang from GBA Capital. Jimmy, another day, another record.
Absolutely. Really good results that we've seen, as you just kind of mentioned, from Medicare. We saw the result comes up from CBA as well, which I'll kind of touch on very soon. But yeah, largely good results for the day. And look, the RBA cut was obviously, the focus of the week. Wasn't obviously a surprise rate cut that we saw, but the unanimous decision was something that I wanted to kind of focus. That's a classic kind of measured easing signal that we're seeing. It is kind of suggesting to the market that the board is aligned on the need for the rate relief. But the kind of cautious commentary also shows that they're not going to go all in just yet. There's obviously very kind of different views now that we're seeing in the upcoming meeting, whether we're going to see another back-to-back rate cut. That's also going to be something we need to watch very carefully because, like you said, we saw the jobless rate, only coming up around 4.2%. But the wage growth is kind of held steady at 0.8% for the quarter and 3.4% for the year. So this kind of gives the RBA a little bit more room for a rate cut. So the market is pricing in around the 80% chance of another 25 bips cut in the coming Melbourne COP day to about 3.35. So I think, it's more likely now that we're going to see another rate cut coming ahead. So it should be something that a lot of the clients should be very happy with very soon.
Well, absolutely. And of course, it does mean that we focus again on the REITs, on the banks. What did you think about why CBA shares were sold off so heavily yesterday and again today?
So good result for the CBA. Largely, it was largely in line with the expectation. They delivered the cash earnings of 10.25 billion, which was on the target, and even kind of slightly higher dividend than expected. Their loan and the deposit growth was obviously solid. The bad debts kind of stayed low. And their balance sheet would remain quite strong. I think what the market focused on for the last 2 days was the issue with costs. The operating expenses were up about 4%, half on half, and about 1.5% above what the market expected. And it was another thing was there wasn't a big upside surprises that we saw from CPA. And that's probably one of the reasons why, with the current valuation of where they're at, it's not a surprise that we saw that kind of sell off. So it's something that we've been kind of slowly been talking to our investors for a long time, that CPA, their current valuation, it's not kind of a surprise that they can present that will really kind of justify the current valuation. We obviously saw that strategic partnership with OpenAI that they just announced, which was a kind of headline grab, but it's just something that we need to now see how that's going to really affect the core value of CBA. So really interesting news flow.
It certainly is. The other point when we come to the likelihood of rate cuts is that we are going to have potentially some more money or mortgage holders to spend. Temple & Webster's result looked pretty solid. Does that just bode even better for retailers like TPW?
Absolutely. And then we're now going towards that December period, over the next quarter. So, it is kind of on a really good track to see some really significant growth. So, they had that really big revenue bump, 21% to 601 mil. Their EBITDA was 18.8 mil, which is a very solid, strong result. So we're kind of seeing a lot of these kind of retail, players having a headwinds. So, Temple & Webster being the, online presence is really kind of, strongly positioned for the upcoming market. And we're also seeing a lot of these type of, with the rate cut obviously coming ahead, like you mentioned, Juliet, we're probably going to see a lot of these kind of consumer discretionary spending coming ahead. And we saw that from JB Hi-Fi, for example, in their reports as well. So I think it's definitely a good time to get into these type of, strong growth companies like Temple & Webster, even JB Hi-Fi. It could be another way to kind of, put on the watch list. Not something I'll probably jump on right now at this current level, but definitely it's kind of really good to build that watch list on this kind of sector.
And what else are you looking out for? I mean, we're nearly halfway through. Cochlear out tomorrow, and then next week's quite a busy week too.
Yeah, look, I think what we are kind of focusing on is Medicare. So it's obviously something that we've been, working really hard with our analysts to identify whether that's going to bring some good news flow for the investors. Right now, I think one of the main thing we are looking at is Trig Minerals that obviously, released their trading halt got lifted the other day, and they recently acquired a new project in the antimony to kind of really boost their earning. Opened really high this morning, but it kind of came back to the same level of what we closed yesterday. today. So Trick Minerals is a kind of big exposures that we're exposed to. So investors should definitely follow very carefully. I've been mentioning Trick for a while on Ausbiz as well. So antimony assets still very something with confidence in. But at the moment, a lot of the mineral sector like BHP, Rio Tinto, and even Woodside is quite undervalued in our view in terms of sector. So we're kind of slowly now reallocating a lot of our gains that we saw in the financial sector into the minerals a lot more aggressively now. So again, mineral sector is probably a good time to focus.
All right, Jimmy, thank you. As always, Jimmy Jang there from GBA Capital. And of course, when it came to looking at stocks, the stock of the day was Temple & Webster. We just discussed with Jimmy, and let's hear what our experts Mark Moreland from Value 3 and Mark Gardner from MPC Markets had to say.
It's done very well though, and I had a look at their returns over the last 5 years. It's only been listed about 5 years, I think, and it's averaged 28% a year total shareholder return, which is excellent. So you can't complain about that. It's basically the business is very strong. The only things that are a little bit concerning is that the profit margin is quite low, and it's I haven't read the latest numbers from today, but it was 1.2 last year, down from 2 the year before. So it's quite narrow, but it's been growing very strongly.
At this point, I really do think, it's the sort of thing that should go on your shopping list if we have a pullback, and I'm fully expecting a pullback over the next couple of months as the economic numbers weaken in the US. So, and this is one that should be really high on your shopping list and just dollar cost average in. If you hold it, definitely don't get out of it, I don't think, because they just keep performing. But I always, for whatever reason, miss those buying opportunities. And I just love their business model, really.
All right, another record on the market. Let's have a look at some of the leaders that helped get us there, including Temple & Webster up 8.3%. Westpac shares hitting a decade high after its quarterly update. Pro Medicus to Origin Energy. Don't forget we spoke to Pro Medicus CEO and Origin Energy CEO. Both those interviews will be on the website shortly. Let's have a look at the laggards, including a lot of the lithium players. Liontown coming under pressure, South 32 after announcing that hit one of its operations, and Rio Tinto they're down by 4%. In the small end of town, Waratah Minerals had a very solid session along with these other players on your screen, and to the downside in the small end of town, Centaurus Metals was down by 16%. Tonight we get producer price index or factory inflation in the US for July, also US weekly jobless claims, and US President Trump will be speaking about Ukraine. Also some earnings from JD.com, Deere & Co, Advanced Auto Parts, and everybody's favourite German footwear Birkenstock. Let's have a look at tomorrow, and we'll take that down, and I'll let you know that CBA household spending insights are due, with spending expected to be 4% higher from a year ago. And we also get earnings from Cochlear, Healthco, Mirvac and Baby Bunting. A record high on the market yet again, up by a third of 1% there on the CBO 200 on the close, and the ASX 200 closing higher by 47 points. 0.5%, 8,873 points. All right, we'll be back again to do it for Friday from 9:45 a.m. Eastern. We'll see you then.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.